Hey everybody, it's Erik Torenberg, co-founder, partner of Village Global, a network-driven venture firm. And this is Venture Stories, a podcast covering topics relating to tech and business with world-leading experts. Hey everybody, welcome to another episode of Venture Stories by Village Global. I'm here today with a very special guest, PJ Kershaw, partner at Melrose Capital. PJ, welcome to the podcast.
Thanks, mate.
PJ, can you give a brief background on who you are and how you got into the crypto space?
Yeah, sure. I'm a recovering corporate VC. Did that for a number of years in Singapore inside a private family office. And now spend my time investing mainly in the crypto space, but more widely in early stage tech investments.
Cool. And how did you find your way down the crypto rabbit hole?
Oh, similar. I guess it's a similar story to to many. Read the white paper in 2012, and yeah, it really sort of just spiraled from there. Sort of started allocating capital in the space about 2013, and never really stopped. You know, I think once you start grokking some of the stuff that's occurring, it's a very deep rabbit hole that just sort of goes and goes and goes. And I think it's, like many, I think it's a very, very profound set of technologies and changes that we're sort of going through experimentation with now.
And what excited you most about the space in terms of like what future? You think a lot about the future. What sort of initially drew you saying, "Hey, we can do this now that we couldn't do before"?
It's a good question. I mean, I think, obviously, firstly, the thing that you get is money, and money out of the control of governments. I think that's fascinating, right? I try and think on long-term timescales. I think that as humans, we're pretty bad at thinking in sort of timescales of more than a minute. And so I try and think of what are the long-term ramifications of technology changes and what might that look like in the future. And so sort of that conceptually has progressed to, I genuinely believe that we are going to see the unbundling of a lot of things that could even extend right to the level of the nation state. And I think that potentially it could bring about enormous amounts of upheaval and social unrest. What the timescale is for that, I don't know, but I firmly believe that is going to happen.
And you're working on this project, Baba Fa. Why don't you outline what that project is and how you got involved?
Yeah, so I was watching a lot of the early attempts structuring DAOs and sort of emergent ideas around commons and Harburger taxes and bonding curves, etc. And it just sort of started fitting together in my head that to actually make one of these things work, that it sort of had to fulfill a set of criteria. So it had to be able to grow itself, and it had to be self-sustaining, and it basically had to behave like a virus. And sort of that sent me down this rabbit hole of how do you actually construct something like that? Now, in technology, things seem to emerge often first in porn or gambling for loads of reasons. Human vices always seem to come first. But, I thought that I didn't really want to build anything in porn, and thought, well, why don't we have a look at something inside gambling, and what would that look like? And sort of that led to the construction of the white paper that we wrote. And yeah, I mean, at this point, it is nothing more than a thought experiment. We haven't built it. We haven't engaged anyone to build it. I think someone will build it at some point. But, I think that because of the nature of a lot of these projects, they're going to need to be built anonymously because they are going to be game-changing organizations or entities, and they will raise the ire of regulators and I think that the people that are going to build those will need to be anonymous and sort of out of the reach of the law. I just can't see it happening any other way. I look at something like FOMO 3D. I thought that was a really, really significant development in the sector. And it really sort of triggered me off thinking about, what if you could create incentive chains to make people behave well, because I'm not a big proponent of governance tokens and governance projects. I actually think it's somewhat of a fallacy.
Why not?
Well, I think that, we've been trying to figure out governance for 70,000 years, right? And we've largely failed. So, I just think there's this sort of arrogant rationality from engineers saying, "Oh, we're going to solve governance," and it's like, yeah, I just don't have strong conviction that that's suddenly going to solve problems. I think that there's going to be elements of it that we need, but I think that the emergent projects that we're going to see in the next, say, 20 years, these big commons and autonomous organizations, I think that the governance will actually just be complex, intertwined incentive systems that will basically reward you for behaving well and for building the network and looking after the common. And I think that also makes sense to me conceptually if I think about at some point we are going to have AI systems that are leading these, and I can't see that governance in the way that we think about it at the moment is going to play a part.
Can you unpack the difference a little bit between what you just described and in terms of what you are bullish on and the governance tokens that you're not bullish on? Like, what are the difference between the two, tactically or philosophically?
Yeah. So, I mean, let's just look at it from a democratic point of view, right? So Churchill, famously said the greatest argument against democracy is a conversation, 5-minute conversation with your average voter. And he also said, democracy is the worst form of governance apart from all the rest. We just genuinely haven't actually come up with like really solid forms of governance. Each of them have massive failings. And, I can see that, with these governance projects at the moment, we're going to build voting systems and ways of managing a crowd to make a decision. But I just don't think it's terribly interesting. I don't think it's going to be the ending point. I think that the ending point is going to be incentive chains, because incentives drive all behavior. And so I think that that's what it's going to look like.
So instead of things like quadratic voting or mechanisms to change how people vote, change how they're incentivized to participate in the network natively?
Yeah, more or less. And I think that, you'll be incentivized to behave in the benefit of all, and you'll be incentivized to not behave badly as well. That's why I think the construction of a lot of these DAOs and commons is super important to really, really nail the incentive chains before any code is written. Like, it's really, really hard to come up with the incentive chain that will actually grow the network, incentivize good behavior, and allow all of those elements to come together that will actually drive the thing forward. It's much, much harder than it sounds. And, I would like to see more in the industry of people actually documenting, here's the incentive chain. Here's the way that we see that this thing is going to grow, and to have sort of more open public discourse about that. I think that will be super interesting when people are talking about that more.
Yeah. And can you unpack a little bit, for our audience, let's build a foundation here. What is sort of the problem, or unpack sort of the tragedy of the commons, and how are DAOs and commons, projects, et cetera, is trying to ameliorate or fix the problems?
I think that the concept that we currently have of companies as entities that are made to maximize profit for shareholders is a concept that has reached its zenith, and I think that it's going to. I think that what crypto is going to bring is an entirely new set of organizations where the benefit flows, the value accrues to the users inside the networks. And I think that is such a profound and powerful concept that people will be able to interact with these commons, and they will be cared for, and they will be able to work inside them, and they will be able to effectively earn inside them as well. And it hasn't been done yet, but I think that's where the future is going. I think that capitalism also has kind of reached its natural endpoint. I think that, we haven't had capitalist systems for that long when we talk about sort of human prehistory. And so I think that it would be a mistake for us to just think that that's going to continue forever, because it's not. And so I think that there's other major changes in the world at the moment, which sort of all point towards, some big changes coming. And again, I sound really melodramatic about it, right? And I'm not. I just think that I think it's going to happen. I don't know the timescale, but kind of when I look at everything and where the current state of the world is at and where the current state of the technology is at, my natural conclusion is to draw a line towards the development of these types of tools and technologies.
Say more about this. Why has capitalism reached its zenith? What does that mean for that to be true, and what changes can we expect because of that?
I had the benefit, I guess, of growing up in New Zealand, where we consider ourselves like super uncorrupt, right? And then, that's kind of cute, but it's super naive, because when you're out in the and working in I've worked in a lot of developing markets and worked with a lot of politicians in developing markets. And you find out pretty rapidly that sort of corruption is the name of the game, and that's how everything works. And that's driven by greed, and it's driven by capitalist ideals. And, maybe I'm looking at it through rosy tinted glasses, but I just feel that there's a better way that we can do things as a collective group. And I think that only now, with the emergence of the tech stack that's being built around crypto more widely as an industry, I think that we finally have got the tools that we are actually going to be able to build systems that can actually have a chance at making a different reality. I just don't think it was possible before, this computer science breakthrough. And so that part of it, really excites me. I just think that it's an idea whose time is coming to an end. Yeah, I mean, I'm not sure I can, this is just out and out guesswork, right? Like, I can't point at any event and say that's going to be the downfall there, or that's the reason why. It's just, again, it's a trending of a lot of different things, from like the rise of authoritarianism around the world to lots and lots of things,
Yeah, sort of the debate is this sort of the end of capitalism, or is it sort of an era of hyper-capitalism and markets in?
Yeah, who knows? Who knows? I just think there's a better way. I just think there's a better way we can do things, and I think that the technology is coming down the pipe pretty quickly that's going to allow that to happen. And I think it's going to be fascinating to watch, because I also think that it's going to be so profound, some of these changes, right? Like, if you consider that, let's say and what do you reckon? Within 5 years, I don't even think you'll need to be that clever, and you can effectively be able to hide your wealth, right? And I reckon anyone will be able to do it. So that then makes the ability of the nation state to tax, it heavily degrades that. And if a nation state can't tax, there's going to be all sorts of problems. So I think I think that there's like a number of things that are all going to happen sort of roughly at the same time. And I don't think they're a long way away either. I certainly think that it's going to be within our lifetime.
Totally. So talk about what DAOs are and why are they fundamentally game-changing?
Well, they're autonomous organizations, right? So they effectively run themselves. They don't need managers or boards or leadership teams. They effectively, in my opinion, will be a cluster of people behaving in a way that is then rewarded by that entity with probably a native token, which then has its own way of recycling itself within that system. And depending on what its point is, it could do things like build value. So in Bubba Father One, the ways we constructed it is that we have it so that it automatically buys Bitcoin. Part of the funds that flow through automatically go to buy Bitcoin and provably burn it. So that effectively means that the underlying token has some part of its value is inextricably linked to the holdings of Bitcoin that underlie it. So I think you're going to see things like that. I think you're also going to see. I think you're going to see in time. I think you're going to see things like healthcare DAOs, where people will buy their generic drugs from like a healthcare DAO, and that healthcare DAO will actually take short positions on listed pharma stock. Like I just think that makes sense, right? Like you will have people working in their collective benefit that is for the collective benefit of the people. And I think that these entities will actually also actively be involved in bringing down some of the corporate structures that exist today. And you'll be able to do it slowly at first, and then they will get very big very fast because it will just make sense for people to be involved in them. I think that that's going to be one of the biggest things about it, is that it will just be so compelling for me to be involved in certain DAOs, because the benefit to me will far outstrip me not being involved. And then by doing that, I make the collective stronger and more powerful, and you have flywheel effects that roll. And I think these organizations will get massive, and they will be global, and they'll make some of today's companies look tiny.
And the benefit being economic upside?
Yeah, look, I think you're going to see it sort of right across the spectrum, right? Like I think that there will be economic upside for those that are involved. I kind of also believe that, me personally, I think that equality is a myth, right? So go back in any stage in, human prehistory, like, there really hasn't ever been a time you can point at and be like, oh, we're all equal then, apart from maybe when we're roaming around in bands. But even then, one guy's going to be faster than the other or bigger than the other, etc. So I think that, the reward mechanisms that sit in the front of these DAOs will obviously, similar to Bitcoin, it will reward the first users commensurately to be early adopters. And so, again, if you think about the sort of viral growth mechanisms that have to be built into some of these things, you will get more economic reward for joining these networks earlier.
Let's take a public good like roads, or a question people criticize libertarian philosophy always have is who builds the roads. Like, let's take a public good. How will DAOs or other commons projects like fix this in a new way? Like, what's an example of it?
I'd have to think about it, but I'm sure it can be done. Like I've thought about that pharmacy example that I gave you, and I'm sure that'll be done. Roads, yeah, like public goods. You'd have to think that at some point we figure out how to do public goods better, right? Like there's so much inefficiency that exists at the moment inside that, and at the moment the money effectively comes from the people anyway, in forms of either council, taxes to council or rates, etc. So like the money already exists inside the system. It's just figuring out how to apportion it in a better way. So again, you kind of probably have to take a step back and go, well, do you even have councils? Do you even have local government? Like what does that look like next? Because once you're tackling some of those problems, you'd have to probably be in a position that, big government is either gone or is dying or has disappeared. Do you know what I mean? Like it's hard to comprehend sort of what that might look like. But I think it can be done.
Yeah. What do you think, like zooming out a little, like what is the future of governments and how will that road to get there? Like what will that look like?
I don't know. I think, I think something that's really interesting that's happening at the moment is, regulation around crypto. So you're seeing all this regulatory arbitrage. I think that's a little bit of an insight into kind of what might be coming. Because, similarly, like when the printing press first emerged, the church in Europe did everything it could to shut it down, because it removed all of the power from the church as the sort of central point of information. But all that happened was that the printing presses then shifted into areas where the church wasn't strong. And so you had areas in, Bavaria, etc., that suddenly became these hotbeds of information because that's where all the printing presses popped up. And so I think the same thing's happening with crypto, right? You're seeing all these states and entities who have got fuck all going for them. That's maybe a little bit unfair, but things like, like Malta's like, we love crypto. Everyone come to us, right? Because to them, it's a massive win. If you look at the history of Singapore and how Singapore was created, Lee Kuan Yew did a very, very similar thing with Singapore in creating safe harbor for money. Because Singapore is 30 kilometers east to west, 20 kilometers north to south, and it's got nothing. It's got no natural resources. It's got nothing, right? And so he said, well, I'm going to make this a hub, and I'm going to make this safe for everyone to put their money in, because everyone around there is corrupt. So, I think what you might see happening in the first instance is what we're seeing now, which is this regulatory arbitrage situation. And then I even think a step further than that, I think you'll start seeing special economic zones get set up where they have even further than just having sort of crypto-friendly legal structures. I think that you'll actually then start to see the emergence of cryptocurrencies in and of themselves and crypto tokens as native assets that are used inside those special economic zones. And I don't think that that's too far away. All it takes is a state to be failing. I mean, I was listening to a podcast the other day, and Naval Ravikant said something interesting, which is he was like, at some point in time, a failing country is just going to switch their currency to Bitcoin, most likely. And he was like, all they need to be is desperate enough and smart enough. And I think he's right. Like that is all it's going to take. So I think you're going to see these sort of baby steps, but I think that sort of Mother America has lost control of her money, and you can see that in loads and loads of different ways. But I think sort of the cat's out of the bag, right? Like it's not coming back, and I think you're going to continue to see that dispersal of talent, the dispersal of capital, and you're going to see new centres arise where it's just purely in the benefit of those actors inside those governments or states. What happens after that? No idea. Because if they're successful experiments, right, then that's sort of it's a slippery slope. But yeah, I think probably that's about as far out as I can guess.
And while we're at a 50,000 foot view, how do you think about this with the intersection of AI? I know it's something you think about.
Yeah, look, I don't know a lot about AI, right? I find AI it's a very difficult space to invest in because I just find it very specialized. But I do think that, again, if I sort of draw the line out into the future and what I think it looks like, AI, as far as some sort of friendly AI, is going to be involved in these, autonomous organizations and commons. Like it is, like fundamentally it is. How that emerges, I'm unsure, and I think that it carries enormous risks if we get it wrong, because we need to ensure that we are looked after, because we just aren't that smart. So we need to sort of stack the cards in our favor.
Yeah. And going back to ground level, can you introduce what bonding curves are and why they're important?
Bonding curves. Again, I'm pretty limited on bonding curves. You should ask Simon. Simon is at Della Rivia. He's the man to talk to about bonding curves. But effectively, it is, and correct me if I'm wrong, but it is a similar concept to being sort of, if you're first in, you're getting higher rewards, and then you can effectively sell back your token back into that market, and the liquidity should be there. I guess one of the questions I have about bonding curves is they seem to work well if you've got a growing market, but I'm not sure what happens if, a market falls apart and how that unwinds and what that looks like. But I think it's an interesting concept. I think Harbinger tax is a fascinating concept. I think that is definitely
unpack that concept for the audience.
Right. Yeah. So the Harbinger tax is effectively it's a self-selected tax on an item that, in the purest sense of the term, let's say I own my house, and I say my house is worth $10. And then, therefore, I'm prepared to pay 10% tax on that, and so I pay $1. But if anyone is happy to come along and pay more for that, the underlying asset is always for sale. So there's never a position of having almost private property. Almost everything sits almost in custodianship, and then you have to self-assess tax. And if anyone wants to come along and buy that and hence pay more tax, then they're able to do so. I do have a problem with Harbinger taxes as well, to the extent that I think that we are in a world where, money is very unequally distributed. And I think if you jumped into a system where you had Harbinger taxes, the rich would win again anyway. So, but I think that conceptually, it's a really, really fascinating framework. And I think that there's ways that you can modify it to get similar outcomes. But, you have to really change the concept of what is private property ownership. And I think that's really interesting in and of itself as well. We built a modified Harbinger tax system into the Bubba Farr white paper, which I think, if built, would work quite well. But yeah, I think it's fascinating. I think it's hard. It'd be hard to introduce into capitalist society. Hard / never going to happen. But I think that we can and will inside crypto native networks. I think it's definitely going to happen.
So when you say you're concerned about equality, there's a lot of scenarios in which inequality is increased in terms of crypto getting more mainstream adoption. What do you say when you mean equality? Do you mean like just wealth inequality straight up? Do you mean a sort of quality of participation, of like voice, exit? Or what does equality mean to you there?
I just think equality is a fallacy. I mean, I know a lot of people will get at that on Twitter about that probably, but like, I just don't. I think it's an ideal that can never be reached, and yeah, I just think it's a fallacy, and I mean right across the board. some people are wealthier than others, and some people are more talented than others. And, that's really tied up in what drives humans and progress, is that some people are able to operate at different levels. And, that makes us, I think it's sort of inherently baked into what we are and who we are. The people that, the people that have tried experiments for getting equality, largely, probably if anything were, communist groups, and they ended up sort of bringing us hundreds of millions of deaths. I'm skeptical of anyone that tells me that they're seeking equality. I just don't believe in it. Like, don't get me wrong. I think we can bridge the gap and make things better and easier and closer. But I also think that, conceptually, I just think it's a flawed argument. It's a dream you can never achieve.
Were there any other ideas from Glenn Weyll's book, Radical Markets, or his paper, I believe, Liberal Radicalism, that you were inspired by?
Look, I think there's loads of interesting ideas coming out of the woodwork on this, and I think there'll be more. Again, what's exciting is that because we've been able to create a system of scarcity, provable scarcity, and value sitting inside digital assets, I think that we're able to completely upend, now that we have that and that exists, I think that we now can completely relook at what ownership even means, and kind of what the optimal systems can look like for everyone. And so, funnily enough, I think that they will probably be more equal than they are today.
What did you take from the book World After Capital?
I've only read bits of it. I think, obviously the whole USV team's very sharp, right? Proven over time as just brilliant investors. And I think that Albert he's right onto something. I think fundamentally I agree with the bits that I've read. And again, it ties into kind of my thinking about that we are reaching the end of that cycle of capitalism. I think that he points out that with technology, a lot of things just get rated to zero. Distribution, basically marginal increase in cost just goes to zero for so many things. We're still only seeing the start of that playing out, and the more and more that plays out, again, it's going to have profound impacts on society.
There's this sort of framework in terms of what capitalism, is really good at solving, sort of, certain set of problems that are where value is sort of narrowly created, easily captured, and over a short and defined time horizon, but really struggles where there are areas where they create negative externalities. It's like hard to price an oil spill, or tragedy of commons, as we public park trash. So you get things like climate change, public health, or education, or infrastructure, and maybe crypto can make these problems more legible, or implement price mechanisms in places where they didn't exist prior. Can create your shared network incentives, that you were just discussing before, and then of course the no reliance on third parties. And going back to like some small or sub instances of price mechanisms, you got things like income share agreements, pay to move instruments, pay for discrete units of education. There's just some in terms of how I think about it.
Yeah, and look, I think you're right. I think you're right. Like, it is going to happen, and again, it's just in my mind, it's a convergence of loads and loads of different things. I think like my background's in politics and anthropology. All right, so that's what I did at uni, and then I've worked in tech for 15 years. But one of the things that excites me so much about crypto, what really just always grabs me, is that you're seeing this melding of concepts and ideas that have been talked about for thousands of years. So you're seeing complex issues in the humanities and in philosophy, and even as simple as, well, not simple, but money and moneyness, and what is value and what is property, and all of those things smashing into one another. For any type of student of history, it's, crypto is literally the most amazing thing that is going on right now, because kind of once you sort of fundamentally can grok the power of what these things are, then you can kind of look backwards and go, wow, we're really going to change a lot of what we've constructed. And yeah, I mean, I find it, when you're so far down the rabbit hole, it's sometimes hard to understand why more people aren't down the rabbit hole, which is probably not we don't want everyone down here. We'll all be going insane. But it's hard to sort of poke your head up the air sometimes when you're so deep thinking about these things, because it does, well, for me at least, it does sort of become quite consuming. I don't know about you. Are you consumed by crypto?
Yes. But my day job is venture capitalist, and yours too. I'm not 80% crypto the way you are, but I'm spending probably the biggest chunk more than any other sector. But let's sort of transition a little bit into how you sort of think about the intersection of crypto and traditional venture capital. How sort of the crypto investing landscape will evolve. Like, will it be traditional VCs, traditional crypto funds like Pantera, Polychain, et cetera, or new players? Like, what's the future of crypto investing?
Yeah. Okay. Lots of thoughts on this. So I think, like, one of the most profound changes that sort of happened on the path to decentralization of VC was definitely AngelList and platforms like AngelList that suddenly unlocked the ability for international investors to access deals at the same terms that were being done in the Valley, and deals were happening in the Valley. Well, that excuse me, that was enormous, and I can say that because I was within that first sort of probably bunch of people that was really pushing the envelope on that back in 2013, and that is kind of that's then led to the sort of broader theme of this decentralization of VC, which is still occurring. The interesting thing about crypto is that it completely changed the liquidity dynamic for a lot of funds. So, going into this bear market, there's a lot of guys who potentially would be very good fund managers who would be deep underwater at the moment. And that sort of may mean that that's the end of their career, which is unfortunate. That's just bad timing. But the reverse happened as well, which no one was really talking about, which is that there was a whole lot of terrible fund managers sitting on bad investments. And some of those bad investments were able to spin themselves into some sort of blockchain company, put a token out there. Some of them were worth over $1 billion, and these guys were able to get liquidity and make their funds look good. So I still think that fundamentally they're bad investors, but that comeuppance will come in the next fund or the next fund or the next fund. But I think that, there was a lot of guys that were also saved by the crypto upside. I mean, the liquidity thing, especially for a guy like me, the liquidity thing is enormous, right? Because, in the halcyon days of 2017, you could literally roll from investment to liquidity in some cases within like 90 days. It was ridiculous what was happening. And of course that had to stop. But nonetheless, these are liquid markets. And they will only, I believe in time, increase in their size. I think that you have to think about the way that you invest and manage a portfolio really, really differently. I think that the new types of funds that are going to come into space, I think they're going to have three quite discrete parts to them. I think you're going to have a OTC desk and a quant trading function, because you're going to have inventory that you're going to need to get rid of. So I think that that's going to be a really important part of the fund, and I think that you'll have income generation out of that as far as taking long short strategies with the quant trading side of it. Then I think you'll have Lawson Baker talks about a working fund that sits sort of in the middle, and I think that and Jake talks about his generalized mining, etc. Whatever. same thing. You're doing work inside networks to become a valued actor inside that network and be able to get inventory that you want in the projects that you believe are going to win long term. And then I think that you are going to have a traditional VC venture function that sits on the other side. So I think that to LPs, it's going to be a really different proposition because, you have to start to think about, well, what does the liquidity cycle look like to an LP? Do you have, say, a 3-year lock-in and then you're going to get, do you have redemptions or do you just have disbursements? Do you know what I mean? So I think there's going to be some really interesting developments around that. And if you look at the likes of what the multi-coin guys are doing or even the polychain guys, like they've kind of had to figure this out on the fly and having to spin out all these separate entities. But I think if you were zooming out now and saying, righto, we want to create this from scratch, I think it would look a bit different than what the funds do right now. What do you think?
Meaning look different, meaning it would look the way that you just described it should look, or how will it look different?
Yeah, I think it will look something like that. I think you need all of those pieces. I don't think you will be able to maximize your gains without having all three of those engines operating inside the same fund. I think they're all very important pieces.
Do you think traditional VCs will be able to orient that way, or do you think even traditional crypto funds will be able to orient that way, or will there be sort of a new set of emergent winners? And my question is, I was talking to Joey Krug from Pantera, who I'm a big fan of, and he was saying that in the next 5 years, the crypto funds that will be the winners in 5 years from now are the ones that are winning today. So there won't be that high turnover, except in the subfield of sort of, quant crypto investing, basically, but that Polychain, Pantera, et cetera.
Yeah, it's a good question, right? Like, bottom line is, and I had a few tweets with Kyle Samani about this a few weeks ago. Bottom line is, you still have to pick winners. I think everyone kind of gets a little bit convoluted and lost in the weeds. You still have to pick winners, and you have to be able to be deploying capital at the right price on the winners. Like it really is as simple as that, right? So, I think that there's going to be a place at the table for anyone that can consistently pick winners. The same as in venture. I think that traditional VCs are going to have a difficult time reorienting towards this. I think it almost becomes a subset of venture capital all by itself, or even just a subset of investment all by itself. Because I think that the return dynamics will look different as well. So, traditional VCs will find it hard. I think that the crypto funds will be able to kind of get themselves there, and I certainly think that the new fund managers will look really different when they do emerge.
And who are going to be the LPs in these types of new vehicles?
I don't know. That's what everyone's trying to figure out, right? Certainly. I spent the last few months in Asia and Europe and Dubai, and spoke to a lot of LPs. And like this, it's easy to forget how big the kind of education gap is. Like you're still having a lot of conversations, and it's blockchain, not Bitcoin. It's just like, where do you even start? So, I think there is obviously a subset of investors that are going to get it. I think that there's a load of funds out there trying to find those people, and obviously, everyone's sort of chicken littling and running around saying the world's ended. But, for those of us that have already lived through a crypto winter, it does feel a little bit like we've seen this all before.
On that note, you've invested in stuff way beyond crypto. Rappi being a company we share in common, sort of an Instacart for Latin America. How do you sort of describe your early stage investing thesis?
I think about it in different ways, right? So, as far as constructing a thesis, right, you're reading a lot, you're thinking a lot, you're looking at what's happening, and then you kind of get to a point that you kind of roughly know what you're looking for, and then it's all about getting good deal flow, right? And then so, I look at probably about 1,000 deals a year, and I might invest in 5 to 10 a year, maybe. And normally it's a pretty quick yes when it's a yes, because you're saying no to so many, but you kind of roughly know what you are looking for. So, going back to, say, Rappi. So Rappi was part of a thesis that I had, that I looked at the unit economics of the logistics and delivery businesses, and I could see that they were going to be, in my opinion, less profitable in the developed markets, and they were going to be more profitable in the developing markets for a number of reasons. One, the labor's obviously a lot cheaper, warehousing's a lot cheaper, and a lot of these markets are coming out of poverty. And so as those markets naturally grow, you're just going to have bigger markets. And again, I'm talking on a long-term timescale. So, and that was one thesis I had. And so I made an investment into Shaldal in Bangladesh, and into Rappi as well in Latin America. And they both sort of fit that thesis. And then you look at something like a Red Mart in Singapore, which the whole time I was saying, I think this is a terrible investment. They raised 70 or 80 million before failing effectively and being acqui-hired by Lazada. But the unit economics of it just never worked. It just never worked. You could slice and dice it however you want to look at it. It just never worked. So that was that particular thesis. And then with the crypto stuff, I think that anyone that's been around since, I guess, 2012, 2013, you don't have to scratch too far, and they're probably up the Bitcoin maximalist end of the scale. Everything's a scale. And, I just felt that, it was going to be an emergent technology, and that it was 100% going to be a thing. And so that's why I have a very highly concentrated portfolio inside crypto. And, one of the other benefits of having bear markets like this is that you're able to, some of the best investing that I did in crypto was between 2014 and 2016, because VCs are offering pretty shitty terms for really good businesses. And if you're able to get in on those deals, you can make really good gains. And, I saw that in the last cycle. And then also what's interesting this time around is that with some of these liquid assets, if you know the buy price, if you like an asset and you know the buy price of where a VC entered, there's opportunity to be able to buy effectively under the value of where VCs bought, right? So I'll give you an example like Maker. So I think A16Z, they bought 11%, 15%, something like that of the network. And I think they paid a blended rate of something like $340. Now, if you were long on that asset or wanted to be long on that asset, you had about 3 or 4 days last week where you could have bought a significant holding for about 320. So, again, that's the first time in venture, at least, that those sort of opportunities have existed as well. And I think that's really interesting as well. And I think that, you're going to see more of that, if the bear market continues, which it, probably will.
Yeah. And how do you think about differentiating between investing in Asia versus US?
It's definitely different. The thing a lot of US investors miss is that, and this is kind of part of the reason why, like Uber failed in Asia, is that, there's a lot of markets in Asia which are much bigger than the US, much bigger. And then there's a lot of markets which are similar size to the US. And you can't just roll into these markets and basically be kind of, here's one solution that fits everyone, because it just doesn't work. So if you look at why Grab, for example, did so well against Uber, they literally customized the app individually for each different country. So, if you open Grab in Indo versus Singapore versus Myanmar, it is like a whole different set of services. It's got the same UI and UX to an extent, but it's very customized to the locals and the way of doing business in that country. And Uber just missed the boat on that completely. And I see that time and again with a lot of US companies that are going into Southeast Asia and Greater Asia, that there is nowhere near enough time spent on looking at the localization of apps to fit the culture. So I think that's a really big thing. And just recognizing that also that each of these cultures have got completely different frames of reference for what deals mean and what IP means and what contracts mean. Like the Chinese have a completely different concept of IP than what Americans do. And so the Americans, like, oh, these assholes, they're going to steal our stuff. But the Chinese actually culturally don't have an issue with that. Like, what's the problem? But that extends right across all of these different markets and groups, that what we consider Western norms are just that, they're Western norms. Like, these other countries and markets don't care. It's irrelevant to them. And I think that, that was a great benefit of me being able to spend a lot of time in these markets. Like, it gives you, a wonderful frame. It gives you a wonderful frame of reference for sort of figuring out what's happening. But I certainly think that it's something that US centric investors should think about a lot more. Yeah.
How do you think about just fund investing more so on the LP side? Like, what would be your, and I think you've done some LP investments. Like, what is your approach to sort of picking emerging managers or just picking managers broadly?
Yeah, no, it's a good question, right? Like, the interesting thing about investing in fund managers is that, fund one is always the dream, So almost irrespective of check size, you can normally get into someone's fund one if you're close enough to them. Fund two is usually 36 months after fund one. There's still nothing really to look at from fund one, apart from maybe a little bit of upside. But fund three is basically all the LPs are looking at the performance of fund one. And that's where you get real institutional inflow, like big inflow. That's when a fund will go from being a $50 million fund to a $250 million fund. It's between 2 and 3. And so as a smaller check writer, I have to try and invest in either fund one or fund two. Now, most people will tell you that fund two is the riskiest. I don't think it is. I think that I like looking at what someone's done in fund one, and because often I would have seen a lot of those deals anyway, and it'll give me a feel for what they're thinking about. And then fund two, all of the LP investments I've made in the funds have always been at fund two, because if you're right, then basically you can almost always grandfather over when other people just get locked out because it's institutional capital. And then also, I think you have to have like a sort of a broader thesis about what you're trying to achieve with a fund as well. So I look at something like Jungle Ventures, which I'm an LP in, and they've got a massive deal flow in India and Indonesia that I just simply wouldn't be able to get. But I want exposure to those markets. And so, I use it as a tool to basically fill out my portfolio in ways that I can't do. So that's kind of how I think about it.
Yeah, and maybe we'll close on this. What do you think is sort of the future of decentralized VC broadly, or fully decentralized VC?
Oh, good question. I don't know. I think that like you can kind of see a world, right, that you have these loose networks of people like analysts who are producing analyst reports who get paid in some native token for identifying talent, and then even associates, which is doing diligence, which is broadcast to a network, which can then also be purchased. And they would have to, similar to say what Numero is doing, I think that they would then have to stake based on how good they felt their reporting or diligence was, and that a partner who's even got more at stake could buy those reports, but could also slash their stake. And I think what might happen is you might get these kind of loose groups of people working together on multiple deals all over the world on a sort of deal-by-deal basis. And I think that there will be a token that sits below it. And I think that it will involve a lot of staking. And because on the other side, if you look at like, where does the capital come from? Well, you've already got big sort of crowdfunding platforms. So I think it would just be the extension of that. I look at something like AngelList or Bank to the Future. They're probably the two most likely to do this. But I think it will probably happen. Someone will do it. Because there's no reason, if you're looking at it now, right? Like, I live in New Zealand. I have no desire to move to the US or whatever, but I do have proprietary deal flow. So it's like, how do I make the best use of that whilst still, living in New Zealand? And I think that kind of ties more broadly into like, what is the future of work, right? And I think most people would agree it's going to be fully distributed. And so what does that look like in VC? It's something I've been thinking about a bit recently, actually. But yeah, I think it looks something like that.
I think that's a good place to close. If people want to learn more about what you're up to and want to catch you online or read more, where would you point them and what should they stay tuned for?
You can find me on Twitter, ranting and raving at PJ Kershaw NZ, KERSHAWNZ, PJ Kershaw. That's about it. I write about all sorts of weird stuff that comes out of my mind. Yeah, but mate, thanks for your time. Really appreciate it.
If you're an early stage entrepreneur, we'd love to hear from you. Please hit us up at villageglobal.vc/network catalyst.